Well, we start off today's show with the global economic outlook. The World Bank has slashed its global growth forecast for 2022 and 2023. That is, as it cautioned that a rise in inflation, debt, and income inequality could jeopardize the recovery in emerging and developing economies. Now, in its latest semi-annual forecast, the World Bank predicted that world economic growth will decelerate markedly to 4.1% this year. That's from 5.5% last year. And it'll also drop to 3.2% in 2023. Now, throughout the COVID-19 pandemic, the Washington-based lender has raised the alarm about growing levels of inequality, both within and between nations. It is now forecasting a yawning gap in growth rates between advanced and less wealthy economies. Richer nations are expected to see a deceleration in economic growth from 5% last year to 3.8% in 2022 and 2.3% in 2023. Now, for emerging and developing economies, by contrast, the bank is calling for growth rates to plunge from 6.3% in 2021 to 4.6% this year and 4.4% in 2023. Well, let's discuss that World Bank report further with Anthony Mveyange. He is the Executive Director at the Partnership for African Social and Governance Research. Great to have you on the show with us today, sir. Now, this World Bank, it's certainly warning that developing nations will fall further behind the rich world. In fact, David Malpass said that there was a canyon between growth rates in rich and poor countries. Now, the outlook for weaker countries is still to fall further and further behind. Do you agree with this assessment? And what are the greatest risks that increase the likelihood of a hard landing for developing nations?
Well, thank you. I partially, to some extent, I agree with that assessment, but by and large, I think I speak in terms of African continent, the context is slightly different. And if there's any predictions about how Africa would respond to COVID and the global growth projections, if there's one thing that we've learned over the last 2 years is that most of these projections turned out not to be the case. So in terms of what we expect to see in Africa, unlike developed countries, most of African countries have not locked down their economies. If you look at the current projections from, for example, the IMF and AFDB, Sub-Saharan Africa is projected to grow, albeit modestly, but it does give an indication that Africa is not necessarily on the wrong trajectory. However, in terms of the risks that countries can face, if global economy is actually in turmoil, one of the areas that likely African countries are likely to be affected is on the loans, for example, if because of inflation that is actually picking up in the world, a high interest rate that can actually have a ramification on debt restructuring for African countries, and it can impose more burden for the governments to settle the debts with the Western countries.
Right. And of course, as you're talking about risks there, David Malpass blamed stimulus programs in richer nations for worsening that divide, like you mentioned, by driving global inflation. Now, he also warned that higher borrowing costs could hurt economic activity going forward. What are your thoughts or your views on how Africa can mitigate the harm?
Well, yes. High interest rate can actually, because of high inflation, central banks in the West, they'll need to impose high interest rate, contractionary monetary policy to actually control for this high inflation. And that can actually have a very high direct ramification on African countries, particularly those that they went out on borrowing spree in the last 2 years after COVID onset came on board. Now, what can countries do? So it depends what these loans are borrowed for. If they're recurrent expenditure, I think it's not a good trajectory for African countries. But if those loans are used for development expenditure, maybe something positive could actually be achieved. However, one of the ways to mitigate that is African countries to rethink their borrowing approach, Do they really need to borrow from the West? Do they really, given the turmoil in the global economy right now, given the pessimistic growth projections that we see? So I think it's important in terms of mitigating the situation. Perhaps African countries can borrow less, or maybe they can actually think about borrowing internally as opposed to borrowing externally.
Well, looking forward, some actually believe that it will be central banks and not the pandemic that will drive global economies in 2022. What role then do you think that African central banks can play in helping to cushion African economies going forward?
Yes, I think central banks are going to play a very important role, and I think one of the major roles that central banks will do is the monetary policy. Especially if there's high inflation, the world central banks across the continent will be forced to impose the contractionary monetary policy to contain the inflation, and that will trigger increases in interest rates in the continent, lower prices on bonds so that they can withdraw money from the system. You know, that's one way, and a major way that the central banks can actually have a very direct control. But beyond the central banks, also governments, for example, through revenue authorities, through fiscal policies, they can try to impose wages and price controls, which also, of course, if not done right, can actually have potential ramifications on recession and unemployment in the continent, which is already a very time-ticking bomb that we are facing. So I think that central bank can play a very good role, controlling role, effective role in ensuring that the loans, the money supply is contained in a way that inflation is not becoming a challenging issue in the continent. Because with high inflations, we understand the potential welfare impacts that could come about because of that.
All right. Well, we do have to leave it there. Many thanks for those great insights. That, of course, was Anthony Mveyange. He is the Executive Director at the Partnership for African Social and Governance Research. Well, let's